Revenue Authority is struggling to keep up with its targets, but analysts reckon that this is bound to be short-term, with estimates indicating that much of the money will go towards productive sectors, which will yield dividends for the country's economy in the long term. We have more.
On assumption of power, President Uhuru Kenyatta indicated that his focus would be on creating value and development for taxpayers. This has been backed up by the over 1 trillion budget estimates released by Treasury last week. However, concerns still remain on just how best the budget will be financed. Revenue collections for the year to date has however remained sluggish, with the taxman only netting 560.4 billion shillings, with a deficit of 256 billion shilling to meet the annual target of 117 billion shillings. Tax experts note that this situation will see taxpayers dig even deeper to meet the financing gap.
At best, it seems to me that we'll get to 700, 750. Now, if we get to 700, 750, and then you're saying next year I want 920, that's a 22% increase. And I don't think it's out there to be had, certainly not from regular sources of revenue.
According to the estimates, 442.74 billion shillings will be channeled to development budgets, while 568.33 billion shillings will go towards recurrent expenditures. The budget estimates indicate that President Uhuru Kenyatta is sticking to his predecessor script of building infrastructure, with 125.7 billion shillings being allocated to the Ministry of Transport and Infrastructure. A further 78.5 billion shillings will go to the Ministry of Energy and Petroleum. Analysts say this is an indication that the new government is keen to generate wealth, which will eventually lead to higher revenue collections.
There is a completely different thinking pattern coming in here. But what seems clear is that they are still looking on an expansionist mode to an expenditure will continue to go up. The problem is that unless, and we've said this before, unless we control this expenditure properly, we're not going to see the return that we really want from the expenditure. It's got to be focused and in the right direction.
The incoming Cabinet Secretary and other technocrats at the Treasury will be facing a daunting task of financing the ambitious programs such as laptops and free maternity care pledged by the President during his campaigns. Michael Karanja, KTN Business Today.
Thanks, Michael, for that report. Equity Bank of Kenya has posted a 21% rise in first quarter pre-tax profit to 4.5 billion shillings and said it expects strong earnings growth for the rest of the year. Chief Executive Officer James Mwangi said he was upbeat about Equity Bank's prospects for the rest of the year after Kenya held peaceful elections in March, in contrast to the 2007 post-election violence that crippled East Africa's biggest economy. Falling interest rates and prudent cost and risk management saw the bank register total income rise of about 13% to 19.20 billion shillings from 9.01 billion posted during the similar period last year. Equity, the country's largest bank by customers, said profit was mainly boosted by a rise in net interest income, which jumped 21% to 6.87 billion shillings. The bank's costs to income ratio dropped to 49.9% from 50.9% in the year ago period. Now, looking at more business, just 2 months after Access Kenya founders Jonathan and David Somen said they were open to a takeover bid, Dimension Data has made an offer to purchase 100% of the issued share of the country's only publicly traded internet company. The firm wants to buy each of the 218 million shares in issue for 14.0 shillings, bringing the total offer to about 3.052 billion shillings. And as Adelaide Changole tells us, the deal could be a lucrative one for Access Kenya.
Founded by the Somen brothers, David and Jonathan, Access Kenya was one of the initial internet service providers in the country. The success of the firm in its initial stages buoyed the family-owned outfit to list at the Nairobi Securities Exchange later on, raising more capital and giving a chance to Kenyans to be part of their success story. While the firm has posted remarkable results as a listed entity, things have not been rosy for the firm that is still largely managed by the Somen brothers. This has seen a number of boardroom fallouts in its history, as well as losses in its books. However, the tide seems to have turned in 2012, with the company posting 212 million shilling profit. According to a statement from the Capital Markets Authority, Dimension Data is willing to buy all the listed shares marked at Friday's closing price of 9.85 shillings at 14 shillings apiece. This is a 42% premium. As a result, the share has been suspended from trading in keeping with the market's rules. Current shareholders are also in line for a 30-cent dividend per share should the deal sail through. Dimension Data, which already operates in Kenya through a company called Internet Solutions, will acquire the fiber optic network in Kenya's 2 main cities, as well as 2 wireless networks covering another 10 towns. Dimension Data is owned by Japan's Nippon Telegraph and Telephone Corp and offers data networking services across 51 countries. Adelaide Changole, KTN Business Today.
Thanks, Adelaide, for that report. And now let's take a look at how the Kenya shilling is doing against other currencies and also a look at the stock market. Do stay with us. And well, that's it that we had for you tonight on KTN Business Today. My name is Joy Doreen Bira. Coming up, Nicholas Mudimba with KTN Sport Today.
KTN Business Today in